Hello, everybody. This is Toni Turner, and welcome to the market now on Friday, June 5th at about 11:45 a.m. Eastern. Well, the S&P 500 and NASDAQ Composite are falling pretty hard today, bogged down by a sell-off in key chip stocks and rising Treasury yields following a much stronger than expected jobs report for May. Treasury yields moved higher following the report as expectations grew that the Federal Reserve could actually raise interest rates, oh boy, by the end of the year. The 10-year yield jumped above 4.5%, while the 30-year yield advanced above 5%. And on that note, let's go on to three charts that could give us a little insight into the week to come. First of all, we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows, our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $646.68, just below the all-time high set here this past week on June 2nd at $760. That was our new all-time high. The SPY is currently 7% above the prior all-time high set in January at 697. And the SPY is right at this moment sitting on top of the 20-day moving average, which is coming in at 747. Right on top of it. Also, of course, it is above the 50-day moving average, the green line, which is coming in at $713 and change, and the 200-day moving average, the black line, coming in at 683 and change. Now, we know, you can't see it on this chart, but we know that since a little over a year ago in April, the SPY climbed from those April lows at 481, the SPY climbed in a dramatic uptrend, walked up the 20-day moving average until it hit the October 2025 all-time high right back here. You can't see it, but it's at 690. So that uptrend that we had, you can't see, was a 44% gain in and of itself. Then we had made a quick dip here down to 652. And in November, then it raised back, it bounced back up, regained energy, and pushed up gradually to hit this 697 level in January. And then it just started trading in a range here from 676 to 697 for a while, but then the Iran news came in, the war in Iran started, and that drove the SPY down to its lows here at the end of March to 629, and then it said, what? No big deal. It rebounded dramatically and and moved dramatically at a very steep uptrend. All the way back up, riding up its 20-day moving average to the June 2nd high again at 760. Then this week has gradually fallen down to where we are now at 746. Now, with valuations so extended on many stocks with the higher yields, we have a lot of reasons for a pullback here, a breather as you might call it. And we've known that for quite some time. We knew it would happen. We just didn't know when the when was, but the jobs numbers that we got pretty much put a seal on the fact that we need a little breather here. And the SPY may pull back a little more. So I'd like to establish some support and resistance levels here. I can't guarantee that the SPY is still going to be on top of the 20-day moving average when you see this. So I'm not sure that we're going to have support at that 746 level. We're already down through this high up here, so we can't count that. But we do have this pivot here at 730, 731. We have a gap down here at 723 or so. We have a consolidation here at 710 to 713. We have the 50-day moving average also coming in here at 713. And when you get a moving average and price support in the same place, sometimes that can provide pretty decent support. No guarantees, but sometimes it helps. Then we have down here, we have the prior highs at 697. We've got the 200-day down here at 683. So plenty of potential support. It just wherever the SPY will find it and use it and hold on to it. So with what we have going on here right now, if yields keep moving higher, we may see more of a pullback. So I'm continuing to take profits on my short-term trades, and I'm only nibbling here and there with hard stops. And of course, that depends on what happens next week too. So we've got to be a little careful here. We've had an incredible year, 2 years. Certainly the last couple of months have been incredible. So it's time. It's time. The market needs to slow down a little bit here. It always happens, no matter what the reasons. So be careful, please. Trade very carefully. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that closely follows our NASDAQ 100, which contains the top 100 non-financial stocks in the NASDAQ stock market, including all those big tech stocks and ARI stocks, some of which are rolling over at the moment. Now, when I captured this chart today, the Qs was trading at $721.08. Below the new all-time high set up here on June 3rd at 748. So now we are trading again at 721, and that's 13% above these prior highs that we thought was the top of the uptrend we'd seen for the last year or so, but guess not with everything that's happened. So again, we're now trading 13% above the all-time highs touched back here in October and January at 637. The Qs now, as I'm speaking, are trading below the 20-day moving average, coming in at 721. So probably can't use that for support unless it changes later today. And we are trading maybe below this, but definitely way above the green line, the 50-day moving average. Very overstretched premium to the green line, the 50-day, coming in at 668, and the 200-day down here coming in at 621. So we know that from the Qs April low, a little over a year ago, it was the Qs were at 402 back then. It rallied like the SPY did in a very strong rally for the following year. And it rallied up to the October highs at 637. You can see them exactly just a little earlier in this chart. And it was a 58% rally. I mean, that's incredible. So from these highs at 637 here, profit taking dropped before this. Profit taking dropped, took it down to 585 in November, but then the Qs bounced back up and rallied and consolidated, jumped up to 636 right here at the end of January, then dropped down here to 594. Rallied, tried to get back through the 50-day and the 20-day, but couldn't do it. As I told you before, whenever price is above these moving averages, these major moving averages, the moving averages can be very strong support, but when price falls below them, they can also become a pretty tough ceiling. So that's what happened. Fell down to 594, tried to punch back through, couldn't get through it. Then we had the announcement of the Iran war and fell on the Iran war news down here to the March low at 555. But that didn't last long, and the Qs made a U-turn and started back up from that 555 and then climbed all the way back up, an amazing uptrend, steep uptrend in April and May to 748 up here, then fell to where we are now at 721. Amazing. So what do we do with this? Well, we do have resistance up here at 748 at that prior all-time high. By now the Qs have fallen through the 20-day moving average, so we can't use that for support probably. We have this pivot support here at we have this pivot support here at 7. If we can stay above it, I'm just not sure, about 720. Then we have this support pivot here at 694. We've got the 50-day coming in here again at 668. And we have a little consolidation here at 660. Got a little consolidation here. That could help. Then we have these prior highs at 637. Then down to consolidation highs here at 615. We've got the 200-day moving average coming in at 621. So yes, there's a lot of potential support. However, this has been in a very steep uptrend, and of course, as always happens, and I've been in the market for almost 30 years, when we get a move like this, doubts always creep in, at least after a month or two, and this has been unusually strong. So we just have to be careful here. We don't want to give back everything we've gotten so far. So please, again, be very, very careful next week. Adobe is announcing earnings next Thursday after the close. So that's something to watch, and we will have the CPI and PPI coming out next week. So again, please be very, very careful when you trade. Our final chart today is a daily chart of the iShares U.S. Medical Devices ETF, the IHI. We've traded this before, but not for quite a long time. The ISI has 47 holdings. Top holdings include Intuitive Surgical, Abbott Labs, Stryker Corporation, Edwards Life Sciences, and IDEX Labs. I've been watching this IHI here for quite some time, definitely the last month. And I've been watching it to see if it's going to give me any sign here, potentially, a double bottom. And it looks like it's doing it. Note here that the IHI is part of the medical sector, and the medical sector does not usually follow the SPY or the NASDAQ. It usually goes off by itself, which is one aspect in markets like these that I really like. So when I captured this chart today, the IHI was trading at $50.56, if you can see it right here. It was trading at $50.56 above the red line right here, the 20-day moving average at 49, but below the 50-day moving average coming in here at 51 and change. So it's come down, but then rallied back up. And I like that when price comes down, retests, and then shows buyers coming in. Now, I mean, if we were to look at a long-term chart, and I always do that, as I tell you, always look at a monthly chart before I go into these ETFs or even stocks for that matter. Just to tell you, you can't see it on this chart, but we did have an all-time high for the IHI in September of 2021 at 67. So that's a number I write down. It did gradually drop from there down to 44 in 2023. But if we look at this chart here, we can see where the IHI has climbed back up, and it's up in, it climbed up in November here to 65, and then fell down and kind of walked along the 50-day moving average, then went back up in January to 65 again, and we know the all-time high was in 2023 at 67. So now we know that 65, 67 is where this has gotten to, and then didn't get any higher. But it's a good thing to know, because if it sometime it breaks over it, that could really be a good thing. But after this second high, the IHI started falling as the AI stocks got all the attention. It actually fell down here in May to 47 down here. Then it rallied up to 51. Then it retested this low again at 48. That looks like that could be good. So then it bounced up. It actually gapped up and then bounced up this week to where it is now at $50.56. So if the market stays reasonably strong or reasonable in the next coming week, and if the IHI can stay above, I'm giving it a pretty tight thing here. If it can stay above its 20-day moving average at 49, I'm going to call it. I will buy a small position of the IHI in my trading portfolio. My initial stop is going to be down here at 46.80. If and when the IHI climbs above the 50-day moving average, let's just call that number 51 to make life easy. If and when the IHI closes above the 51 and closes above it for 3 days, I will add to my position, and by then, of course, my stop will be a trailing stop. So you may want to watch the IHI in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Bottom Fish Like a Pro is the perfect training to check out right now with stocks and ETFs like the one I just talked about, like the IHI. It looks like a good candidate for what we're talking about here, how to bottom fish like a pro. Of course, we don't know anything for sure, but it appears to be right now. In this program, How to Bottom Fish Like a Pro, I show you exactly how to detect with high probability how a stock or ETF is just about to wake up from an extended downtrend and finally take off again. Now, our new low price for this program is only $199, and you should be able to make that up pretty quickly. Plus, you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular 7 Steps to Successful Trading, How to Swing Trade Successfully, one of our most popular programs, Trade the Trend to Profits, I love it. How to Reach Charts, great for novices, 3 winning setups, great for short-term traders. These 2 are only $59 each. And again, How to Bottom Fish Like a Pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, be very careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.